Hello and welcome to Blytheway Business News. For today's edition, I'm joined by Steve Curtis, Chief Executive of Caledonia Mining. Caledonia listed in London and on the New York Stock Exchange with a ticker of CMCL and a market capitalisation of around £124 million sterling. Caledonia operates the Blanket Gold Mine in Zimbabwe and has an enviable history of paying regular dividends. Steve, welcome back on the show. You've recently announced your third quarter results. First of all, give us a quick overview of what those show.
Fantastic. Thank you, Tim. Thank you for having us again. Yeah, we're very proud of these third quarter results. It was a record gold production quarter, which we previously announced, and that was nearly 19,000 ounces, which was fantastic. That resulted in gross revenues 32% higher than the previous quarter. Gross profit was 26% higher than the previous quarter. EBITDA 30% higher than the previous quarter. Costs, cash costs down by 8%, down to $695 an ounce, and all-in sustaining costs down 19% to $909. So really, really good. But I guess the important thing when you distill all of that down, earnings per share was up 56% on an IFRS basis, and on what we call the adjusted EPS, which strips out the non-repeating business issues, that was up 102% to nearly 69 cents a share. So we've got a lot to be very, very proud of.
All the numbers clearly moving in the right direction, and that presumably keeps you on track for 80,000 ounces of gold next calendar year, yeah?
Yes, that's absolutely right. As I said, record production quarter of 19,000 ounces. So if you annualize that, we're a hair's breadth away from the 80,000, and that's our target for next year. So we're feeling confident.
Now, I'm guessing that obviously you completed the central shaft, which I can see behind you, and that's a major contributor to the increase in gold production. Have there been any other factors which have helped the increase?
Well, singly, the central shaft is the infrastructure that has enabled us to bring more ore up to surface. The plant has got excess capacity. So the more we can feed the plant, the more gold we're going to produce. So you've got to get the mining right. So the guys got the mining right. We had two shafts to move waste and ore. And we actually were moving the ore through the old 4 shaft, which has got sufficient capacity. And we moved all the development waste out of central shaft. So singly, that is the most important thing. But all the bits and pieces and the components have got to come together. So you've got to mine correctly in the right places with the right grade. Your milling plant has got to work adequately. You've got to have capacity there. And all of those have come together. And it's part of this managed ramp up, Tim. So we're very pleased with the outcome and the direction that the mine is running in.
Okay, so let's just leave Blanket for a moment with its production and its profitability and the dividends it supports. You've also been exploring at Maligreen and Connemara North. So I'm sorry, Steve, a 3-part question. What's the update on Maligreen and Connemara North? What's going to be the main focus for future investment then? Is it going to be in Zimbabwe, or is it going to be, are you looking elsewhere?
Connemara North was announced in December, and that's under option. We have been doing, and that option expires in May next year. We've not put any drills into the ground yet because we've been doing geophysics work, which is always a very important part of an exploration program. So that work is well advanced, and we're just about ready to pull the trigger on deciding where and how many holes to put in the ground. So there's still work to be done there. Maligreen, we announced the acquisition on a 100% basis of that property, which has a defined inferred resource of about 940,000 ounces of gold. And all we needed was the legal claims to be prepared and ready for transfer before we would make payment. That now has taken place. So we've physically paid for the property. And we are now the legal owner of those claims. So the process, again, will happen. The fact that there is an inferred resource of 940,000 ounces tells you that there's already quite a lot of geological information. Our objective, obviously, will be to bring it up the value chain. And we've got to improve the confidence around that resource definition, and then we take it through a feasibility stage, and hopefully that ticks all the boxes and passes the hurdles, and that moves us towards developing a new mine. So, Tim, it's not something that's going to happen next week. This is a process that will take some time, but we're starting from a very strong point of view with 940,000 ounces at Marley Green, and we're really looking forward to taking this along the next stages. That doesn't mean that we're going to sit back now and just wait for Blanket to produce gold and the geologists to do their bit. We continue to look for other expansion opportunities. Exploration by its nature is high risk, and the success rates are relatively low. So we'll continue to look for other opportunities, and we are looking in Zimbabwe because we know of a couple of very attractive assets, again, from a brownfields exploration perspective, that we are working very hard on to see if we can unlock and get our hands on those. In the meantime, we continue to look outside of Zimbabwe, if appropriate. But the focus now, to be honest, is very much in Zimbabwe, in country, and trying to get our hands on one or two other very, very attractive assets. So that's what we're busy doing.
Okay, so interesting growth plans and opportunities within Zimbabwe, and as you say, possibly elsewhere, but most likely in Zimbabwe. Now, let's just take you back to the dividend. In October 2021, October this year, you increased the dividend for the 7th time. It's quite an achievement. Look, I guess it's Central Shaft which is driving it, but from your perspective, what's enabling you to keep on increasing the dividend like this?
It's confidence, Tim. We started the journey of increasing the dividend in October 2019. Well, after the October 2019 dividend. We were completed with the sinking of the shaft, but we still had all the equipping and major exercise and money to spend. But we knew that we were going to get that task completed. We knew that we had access to new mining zones below, and everything was pointing in the right direction that the 80,000 ounces would be achieved. So that gave us the confidence that the cash would be there, and we started slowly tickling the dividend up on a quarterly basis. Now we have got an operating shaft. We're even more confident. We've had a record production quarter. That makes us again more confident. So yeah, October's decision was relatively easy. The gold price is still holding up. Blanket is performing well, and it's our commitment to shareholders to return cash to them as a return for their patience, and we're very excited about that. It is a principle that at the board level we've been working with for some time now. That as long as there's the normal business process carrying on, then we are going to look very favorably at moving that dividend up on a regular basis. We do want, though, to see a commensurate attraction to our share, and we don't want to end up with a very, very high dividend yield and a share price that's languishing. So we've got to use shareholders' money intelligently. But at the moment, and with gold prices rising, the share price is moving. The yield is it's manageable in our minds. It's not too it's not too big. So yeah, keep watching the space around this dividend.
At the start of the interview, Steve, we mentioned the fact that all the numbers were going in the right direction. But finally, I want to ask you one question about observers of Caledonia may have noticed that your Capex figure for next year has been increased.
Yeah.
Why has that gone up?
Now, it's been increased from a number that was included in a technical report for Blanket. And that technical report was based on information of January 1, 2020. Geological information, obviously, that was probably even 6 months earlier. So that was a technical report produced for a particular purpose. 2 years virtually has passed, and the mine has gone through a whole new budgeting process, which culminates in the production of the 2022 budget. And that starts again with a reevaluation of the resource and the mine plan, and it resets the starting point. Now, things are not the same today as they were in 2020. Important things like upgrades in the village where our people live. We've got more people on the mine. We need more houses. We've got more people on the mine, which means we need to upgrade the water reticulation system, the production of potable water. We need to upgrade the sewage system. Now, those had not been projects that were necessary during the phase of bringing the central shaft to completion. And to be honest, we didn't have excess money that we could attend to those things. We have lost some time over the last 2 years due to COVID and some electricity delays as to where we would really like to be from a horizontal development perspective in the new mine at the lower levels. And the need to open up sufficient mining areas for the future of Blanket, not just for 2022, but for the future of Blanket. Development takes a long time. So we need to start spending the money now. We've got a list and a reconciliation. So it's extra development money. So that's going into the future of the mine. It's upgrading the facilities for our staff, which is critically important. Better homes, better water, better sewage. Electricity is a problem in Zimbabwe. And it's a problem in Southern Africa, to be perfectly honest. So Blanket has got to spend some money protecting itself against erratic power and low quality power. So we've got to spend about $3 million just putting in new kit and equipment to ensure that Blanket gets fed the electricity it needs. So, Tim, the 2022 budget formulation was based on different criteria, different circumstances. The mine has moved on. We are cognizant of the fact that Blanket has been, certain aspects of Blanket has been starved of money while we've been plowing all the money into the self-funded Central Shaft project. And there's a time that you just have to come to account. And that's where we are. It's still very affordable. It's all done out of self-funded generated earnings. And it's money that needs to be spent, and it's going to be spent for the benefit of Blanket for the longer term.
Sounds like the problems of growth and success to me, Steve. Yeah. Is that fair?
Yeah.
Well, Steve, thanks for joining us. That was Steve Curtis, Chief Executive of Caledonia Mining, updating us on the third quarter results from the Blanket mine in Zimbabwe, and also giving us a peek into what the future might hold as they develop their new assets at Malagreen and Connemara North. That's it from this edition of Blytheway Business News. Thanks for watching.